Good day. Ira Epstein of Linn & Associates with your metals market wrap-up, and this is for Tuesday, the 28th of January, 2020, time 1:40 p.m. So we have a ways to go to finish trading up, but the settlement prices come in at 12:30 Central Time, and they're right in this area. All I care about is the area, and that's where the market's at today. We're getting that Tuesday reversal in the stock market. Tuesday reversals down in the metal markets. We've seen some of the risk trade. In other words, remember there's a risk on, risk off. Some of the risk off trade being unwound. That would mean they're selling the bonds, notes, they're selling the yen. I'm surprised the dollar's not down because that's where you run when there's a risk like this. And you're having a bit of a bounce. I want to use little bitty bounce in the energy markets. Now, nothing has changed that we know of with the coronavirus. If anything, United Airlines just announced that it, come February 1st, is suspending a number of flights to China. We have not seen the end of the cases that are coming about from this. We don't know how bad the supply chain lines are within that whole province surrounding Wuhan. We'll find out. I've been watching the numerous TV shows today, a financial TV, talking about supply chain lines. And right now they're using inventory. And the good news, if there's good news, this all happened during the Lunar New Year. So these factories, to a degree, were emptying out anyways. The problem is, if they don't let people back in, what does that do? Dr. Copper, as we call it, copper is considered a metal that tells you about what economies are doing. Dr. Copper has just been sinking away. So while the gold market and the silver got a pop for a short while, they've started to pull back rather severely. Let's take a look at a weekly chart of closes, just closing prices first in the gold. And for the week, the market is down $4. That's nothing. It's Tuesday, can go either way. Market just backing off from the most recent high. I define the bias as to where the settlement price is to the 18-week moving average of closes. Again, this is not the high and low, just closing prices. I then start looking at daily bar charts. And one of my comments yesterday was, we've just had one of the worst viruses, scares that we've had in recent times, certainly in a decade or so. And the market couldn't even get up to where it was on what I call Missile Day. This was the day that Iran fired the missiles at the U.S. And we're pulling back. So we're in something of a resistance zone. You might call it a cup. There's many things that people call this formation. What you don't want to see is getting under 1540. That would be a kiss of death in the market. Chart formation and all. In terms of the swing line, I mentioned yesterday, I'm going to repeat it again. This swing line is right here. You can see the higher lows, higher highs. The problem, and I wrote this study, so I'm telling you the problem. You see this one day, this outside day down, it should not have taken that out. And I know you're going to say, you're a purist. No, I understand the theory of what I wrote. That doesn't mean it's still not up, but I don't trust it. And when the writer of it doesn't trust it, I go, I'm waiting for it to straighten itself out. Now, that could happen at any point, just like you're getting. You get a lower low, either don't take out, in fact, if you don't take out today's low, the swing line's going to move higher. I wrote the study, I know what it'll do. But if it takes that out, well, you're still not at that point. The question is, where's support? And I can tell you where the support in theory is. It's the 18-day average of closes at 1564.80. Markets that have a tendency to rally like this often pull back to that number looking for their footing. We'll see if that's what this market's going to do. Where's the resistance? You hit it. Past tense. Those of you that get my morning subscriber video, this was Friday. I know I was all over this market first thing in the morning on Monday saying to my subscribers, first challenge of the Bollinger Band, throw your emotion out, because this market was way up. And you're going, it's going to go forever, it's going to go. The smart money takes money off the table. They'll give up that it could run on you. Do some markets run? Yeah, look at copper. It's a most unusual thing. Look at coffee. They do happen. But if you're playing for that, watch out. Can you catch it? With trailing stops, maybe. But the idea of coming out against the Bollinger Band doesn't have to be all your position. You're locking in something, and now you got the art of moving your stop. Well, The market backed right away. It let you out again at it too today, and now it's backing away. So I'm still looking at that 18-day average of closes as possibly being where the market wants to go, and I'll consider the resistance at the upper Bollinger Band. Momentum has flattened out. I'd like to see this market stabilize a bit because these $10, $12 swings every day, they're hard. As for gold, silver, get the idea here? Silver's just losing its shirt against it. This is a market that as long as it's over that 18-day average, and this is the gold-silver ratio, on a closing basis, look at the differential that you've got. It just keeps moving to the upside, which means you need more ounces of silver to get an ounce of gold. That means silver's not keeping up with gold prices, and you see that here. Now let me show you what this market did yesterday. The market got to the upper Bollinger Band. Neutrality would be if it gets to the 18-day average to figure out what to do. The pattern, this is yesterday, lower low, higher high. I promise you, I'm not thinking it's going to the lower band, but if it does, the 100-day average in that potential support. And that number comes in 1757, let's call it 1758 to 1768. You're under both numbers. Oversold. You could go lower. I don't care what it does. Markets that go in a 24-hour period from the upper band to the lower band are going to do it without me. And why? Well, that means you had to get short up here to catch this trade. I haven't seen a trend trade in there for a while. This market is not trend. Actually, I can go back. It was trend trading and it hit it. Over here, you got down to lower highs, lower lows, but you stopped right against those two numbers, the 100-day and the Bollinger Band. You rallied up on Friday as the market was wondering, what about this virus situation? You got the terrible news. Again, I'll stand by what I record, and I know what I told my morning subscribers. Those are the people paying for my videos there. That is a number. I think smart money's coming out of something. I didn't see this coming, but I'm not trending anyways. In the copper, this is what I mean. If you're playing for that move, God bless you. You had to catch the top and just have that home run go on, and I'm sure somebody did it. But it's a heck of a trade. How many days are we under the Bollinger Band? Today? Yesterday the market was under it. Day before it's under it. The day before it's under it. That's 4 days in a row. This day it was not. You know what I'm going to tell you? 5 is really pushing it. So at any point, for no reason, it would not surprise me that somewhere between the 5th day and the day after, so in other words, Wednesday or Thursday, this market's going to try to move to the right of that band. It is not embedded. You can get a bounce, and no, I'm not bullish. That's not what I'm saying. I'm saying you're so extended you might get a bounce, and if you don't, c'est la vie. In the platinum market, the market's fighting at the 18-day average of closes. It's finished today's 992.40, 993.70 is that 18-day average. I didn't see the exact settlement when I came on here, but it's right in that area. You have, what, lower highs, lower lows, trend down, momentum putting down, bias down. I'm going to give a warning. I said this yesterday. If you go short this market, because we were under that number yesterday, you got a big risk back over 925.5. Sometimes there's just plays that are too risky, and money management comes into play as much as catching a trend. Now in the Palladium, when you lost the embedded reading, and you lose it right here, this day, this was right here, Monday, yesterday. If you don't get it back today, which you did not do, it often leads to price in the 18-day average trying to get even closer than that together. They don't have to, but I don't care. It often is what it is. And why don't I care? I'm not trending anyways. Got a higher high and lower low. Yesterday was the day, I'm sure I said it, you broke the pattern, you lost your momentum, this chart has to rebuild. Not interested in anything but a trend. You're going to be wrong enough. Might as well trade if you can define a trend. What else did we say yesterday? We were here and we said, you got the embedded reading. If the market goes up, I'm looking for the upper Bollinger Band. We're close, real close. Maybe you can hit it. Today you hit it and you sort of stalled out as soon as you did. So now you've hit your upper targets, you have an embedded reading. Support's all the way back at the combination, first of the 100-day average, all the way down to that 18-day. So in that gap area, if you will, falling all the way back. I'll call that high air. From there, it's quite a drop. To get to it's 50 points. So don't know where the market will eventually find on a pullback at support, but that's a zone that I'm looking at. One of the ways that I look for these zones is a study that I keep bringing up here, and in markets like these, I really use it. I look at what the pivot point is doing. Why? You'll get an extreme in the market. The formula for a pivot point, if you have a good charting service, you've got it. This is one of the popular studies. It's in them. The idea is it's going to take the previous day's open, high, low, close. The formula is real easy to learn. I created a video on it, and it'll be used in the same way in all of them. And you get that P, this dashed line. They'll typically do them on your chart in white. You're looking for resistance points above the market, support zones under, and you're trying to contra-trade and trade. You're trying to buy at the support, sell out at the pivot, sell at the resistance, buy back to it. There's an art to it, and I teach that in this video. It's a 3-part video. The first, I'm teaching you the formula. Second, how do you plot this out, put the colors on your chart so it's easy to see. And the third, you don't get in most spots. We're going to apply the slow stochastic oscillator and use the tools that we have so you get a feel for that, and you can see, hey, this is a better entry than maybe it wouldn't be if this is diverting from where the price action is. To get this 3-part video series, just go to our website, www.iraepstein.com, bottom right, free offers, click on that. You can click up here at any time. If you see this icon on YouTube, it'll take you there as well, and there's a host of other offers. You might want to take advantage of them, especially my new subscriber video. And subscriber means it's not on YouTube. I can say buy here, sell there. I want you to do this for the SPDR and the ETFs. I'm Ira Epstein. You have a good day, and I'll see you tomorrow.